This is our Forex blog video for August 13th, 2012. And like we do most days, the first step of our three-step easy Forex trading system is using this currency meter to identify the currencies that are most likely to continue trending up or down. The real-time trend on the top shows the strength or weakness, green or red, and it's made up of 5 different tools. 3 of them measure the percentage direction, the yen's moving versus the bottom ones, and the other 2 measure the intensity. So anytime the majority of yen pairs are going up or down and doing so with intensity, it's going to be at or above this dotted 80 level here. Underneath that we have the 15-minute trend, hourly trend, daily, weekly, monthly. So, the more time frame trends that line up, the better. You can see the Swiss down here, extremely strong today, 15-minute trends up, hourly trend, the daily trend shifted up a little hour before. The weekly trend's not too weak, the monthly trend's down. Mainly you just want to trade with, especially if you're an intraday trader that want to hold for 15 minutes to 3 hours and your goal is to catch 10 to 100 pips, the real-time trend is all you really need to watch. But the longer the time frames, the better. You can see the pound didn't quite have the same intensity, however, it does have a weekly trend that's up. So if you're a more conservative trader that likes to take less risk, you may not catch every single pip. You might make in the pound trade right here, you might, if you bought it versus one of the weaker ones, you might make 20 pips versus maybe 30 pips, but it could increase your odds when more time frames line up. You can see that between the dollar and the yen, the dollar has a weaker weekly trend, and so when it starts showing some weakness right here, the 15-minute hourly shifts down, the weekly trend really is mixed, it's just slightly up. You have a weak dollar. You can trade that against the pound that's strong or the euro. The euro is strong on all time frames except for the weekly and monthly, and you can see the weekly shifted up around 630. So pound dollar buys, euro dollar buys, or dollar Swiss sells. You got to know which currency is on the top or bottom. So we'll start with the euro dollar. This currency starts the day off underneath our point of control for the previous day. This is the area where most volume or trading activity happened on Friday, and you can see the orange level underneath that is last week's point of control. So underneath that, it's likely to go down. When it breaks above there, it's very likely to trend up. This is the upper value area, and above that area, it tends to explode to the upside. You can see also Sunday night, that was the high of Sunday night. So when it broke above Sunday night's high, most of the time I don't use the high of Sunday night, but when it happens to be right near the value area high of Friday, that's where 68% of the trading activity happened, from the bottom red one to the top green one. It's off to the races, and you can see incredible strength here. You got a couple bar pullback right here with almost no weakness, and it's very likely to go up. The only downside of this trade is it's hitting some Fibonacci retracement areas, and especially when they catch up to our upper containment band, the white line here, this is usually, most of the time, probably 70% of the time, the max high. And when it's at or near one of these other fib areas, it's even more likely to be so. So you have the low right here. You always want to draw your fibs on that first wave up. And, this is usually the maximum profit. It did go a few pips above the 1.618 fib and then, exploded back. If you're a brand new trader, you don't know when to get in. Wait for a strong trend like this going up and wait for a pullback that doesn't have that much weakness, and use our new digital signal processing based moving average. This uses incredibly advanced digital signal processing technology. I like to put a 5-period moving average and shift it to the right, and I like to make it a little wider so it stands out, make it white so you can see it, and you can see this exploded up, pulled back. When it goes back above there, you get in. You might have decided to get out here, get back in again, small profit, and a decent profit here in at 37, out at 54. You add all those up if you're skittish and like to get in and out like I do and trade bigger lots, or if you like to just get in and draw your fibs on there and wait for the fib target to get hit, that's entirely up to you. So the pound dollar also is a good one to be buying. You can see the point of control right here. When this broke out over the high right here, Sunday's high, you get in, and this is your next resistance area. It's likely to stall at Friday's value area high, and it also happened to be last week's value area high, and pretty much ran out of steam there. It chopped around that area. These are very key levels. This one did not have the same intensity that the euro dollar did. Yeah, if you want to, you never know which currency is going to continue its trend. If you want to take trades in multiple currencies, you're going to have to increase your odds of catching those big ones quite dramatically. If you traded the pound versus the euro dollar, you obviously made less money. There's not much, no tool is going to tell you what's going to happen in the future. You can only play with the odds. You saw today that, the pound did not have the intensity that the euro dollar did. And like I said earlier, typically you're going to make more money in the ones that have more intensity today, regardless of what their longer term trend is. Because the pound had a weekly trend that was up, whereas the euro and the Swiss did not earlier, it might have been a higher odds trade to trade this breakout. But once the trend was going up, the euro was the one to be buying in the U.S. session. But if you bought this little pullback, you made a little bit. Bought this little pullback, you might have made 12 pips. This is a much more significant pullback. I like to see, by the way, 15 to 25 pip pullback. So this one right here, I would take it only because it's the first move up. This is the first pullback, and a lot of times currencies don't pull back that much and they explode up. So you got to take the first one. But this one right here, I might have passed on. This is a more decent pullback. You can see on the way up right here, there really wasn't that much strength. And so, I really want to see what's going to go on here. It came up again, pulled back, didn't break down underneath the previous, Sunday night's high. It's also above last week's point of control and Friday's point of control. So being above Sunday's high, being above the point of control levels, this is a decent sized pullback. It's about 25 pips. Starts to go back up. It didn't have that much weakness of it. It was at minus 80 or more. I don't know if I would have taken this trade here. And you can see that one was the nicest one. It went up and made a new high, slightly less momentum than before. Pulled back again. If you bought this one, guess what? It went up a little bit, ran into resistance right here and came back down. You would have been probably buying it right here at 96. It went all the way up to 04. It went up 8 pips. That's enough for me to move my stop up a little bit. I would have lost 4 or 5 pips on that trade, and then I might have considered, seeing how it handled this level. But again, it was relatively weak, so that trend kind of died out right there. We're also working on a new tool that might be a week or two before I release it. This is the euro dollar from before, and what it is very good at, and this one uses, it's very similar to build your own trend, but I'm using much more faster tools in this. I'm using much more weight for intensity-based tools, and I'm also using range bar data for 2 of the statistics. So whenever the market explodes up, it's going to be much faster at showing new trends. Notice the pullback here went red, green right here. You ride it up, and as soon as you see some light green bars, you might want to move your stop up. And unfortunately, that trend didn't continue. Pulled back, notice immediately green, light, went from dark green to light green, means the trend momentum is running out. And guess what? Down. And the farther up it goes, here's 1 wave up, 2 waves up, 3 waves up. Usually after 3 waves, I start looking for counter trends. So, you could draw your fibs on this. When it goes up here, it's dark green. I'm not going to go short, but once it kind of pulls back and goes light green, I'm going to go short right here and kind of ride it down, a little bit and make 15, 25 pips on the pullback. That's the only time I ever count waves. I don't really use Elliott waves in any way, but typically after 3 decent-sized moves, and I call a decent-sized move, 25 to 50 pips, it goes up 25 pips, and it either goes sideways and then up 25 pips, sideways and up 25 pips, or any combination of up, sideways, or down, less than it went up. Let's say it goes up 30 pips, pulls back 15, goes up 30 pips, pulls back 15, goes up 30 pips, pulls back down 15. That's 3 waves. In comparing, the pound dollar to the euro dollar, you can clearly see the intensity is not with the pound. First of all, it went up. It wasn't quite as dark green. When it pulled back, and on this wave up right here, there's almost no dark green at all. So I probably would not have bought this next pullback. The euro, on every wave up, it had some intensity. Look, intensity, intensity, intensity. And anytime you get a pullback where it doesn't even turn red, those are very high probability. And so my goal, because we give our software wave free to probably 90-95% of our traders, we have a couple thousand traders, we have to have people trading or we don't make money. People that are losing money don't trade much, or they trade 1 mini lot. obviously that's a waste of our time. You know, all that we're working on is trying to build professional full-time Forex traders that trade for a living, you know, and put more money in their account, trade, you know, a few $100,000 accounts, a couple hundred lots a month, and that's why we give our software away for free. Getting more new traders to become professional traders, you know, takes faster tools, better tools, and more intuitive tools, and I think that, you know, the few people I've let beta test this are trading well with it, and I'm hoping that it's just going to make sense for people. So it's not available yet. I mean, we do have something similar to it. This one is called the, well, I haven't actually even named it yet. Let me see here. What did I call it in here? Oh, FX Build a Trend Color Candle. It's the same. You can see that there's some of the tools that were in there before have been removed. I'm now using the range bar data for the ADX trend and for one other tool in here. And so if you want to add something similar to your chart now, it's not quite the same. It might be 40% as good as this. This is a wonderful tool I've spent the last few weeks working on. FX Build a Trend Color Candle. You can see the 3x3 power indexes in there, 3-line breaks, Fisher. I took all that stuff out because it's not nearly as good as the new technology I put into the new one. As you can see, this is a no-brainer trade right here. You know, this pullback right here and sideways breakout right here, this pullback right here and pulled back. It wasn't that red and you know, this kept making higher highs. As long as the currency keeps making higher highs, buy the pullback. You know, sometimes these things just go and go and go forever. By the way, the yen was not weak as weak as the dollar, but here's what it looks like on the euro-yen chart. And let's put the point of control information on here. Above the yellow point of control, FX value areas, it's above the most traded price from Friday. So above this level right here, this might have been a trade. You can see it made the highest high for the day. You got a pullback right here. You can either use the 5-period moving average shifted to the right or just kind of visualize the pullback. As soon as it breaks above here, you go along with your stop 1 or 2 pips below the low. And you can see it went up, went sideways here, but it was dark green, so you stick with it. And then it just took off. And notice first sign of a light bar, you know, start moving your stop up, you're out. You bought this pullback right here, you might have lost. You bought this pullback here, you made money. You bought this pullback here, you made money. And because this made a higher high, wait for it to kind of pull down a little bit. I might have got tricked into a trade right here and would have lost on that, unfortunately. You know, you're not going to have winning trades all the time, but one nice win gets rid of a slew of losing trades. And that's it. I mean, that's as simple as it can get. Now, the Swiss was strong today as well as the euro. The Swiss is kind of pegged to the euro, so if the euro is strong, the Swiss is going to be strong. The dollar was weak. So you can see from this, you know, how easy I'm trying to make this. Let's add the FX value areas. I believe with these two tools you could trade. I like the containment bands as well, but to keep things simple, look, price is above the value area of yesterday and last week, so it's more likely to go up. Found resistance at the upper value area. So you might have bought right here, made a little bit, bought the pullback here, kind of ran out of steam here, you get out, and when it breaks down right here, you go short. Notice you will see so many times, it's ridiculous, that when one of these areas, like the upper or lower value area gets broken, when it retests it and can't get above it or below it, when it starts going back down again, you go short. And notice this fell from around 55 all the way down to 20. It's a 35 pip down move. Goes up without much strength, you go short and made a little bit up, you know, a little bit of strength on one bar, then it loses its strength, and there you go. I don't think I can make it any simpler than this for brand new traders. You know, you can always start with a simple trading system like that and add some of the more sophisticated methods, containment bands, trend reversal tools to it, you know, using trend lines, Fibonacci areas as you get more advanced and, you know, progress into more advanced trading tools and methods.